Hello, everyone. All right, it's the end of the month, Jan 30th. So I'm not expecting much today, but let's see. So we are on 30 minutes. I'll just grab an arrow, and we have a market open right now. So just give me one sec. All right, just grabbing the arrow. Okay, so 30 minutes. Let's go on to the 5 minutes. Okay, so we just had market open right now. What we're going to do, as I always do, is we're going to let the market give us a direction. So we'll wait, usually 30, 40 minutes is the best time. Now, sometimes when the market is moving very quickly, like yesterday, the opportunity isn't actually in the 5 minutes, which is the operational time frame that I use. So I use the 5 minutes as my operational time frame. All right, so we're going to wait, come back around 10, 10 o'clock, 10:15. So price will obviously determine when we come back. And then we'll see, just one question, do we have clear direction? That's all we need to answer in the first 30, 40 minutes. So not doing anything now. We'll come back 10:30. All right, it's 10:30. Still no clear direction. So I'm just going to, so I've got my 5 minutes gap here. Just trying to see if there's any, I think there's a hidden fair value gap right here. So again, this isn't 1 minute. I operate on the 5 minutes, but I'm just showing you if you were on the 1 minute, the process is the same. So we have the overlap here. This is, I believe, a hidden fair value gap. All right. So because the 5 minutes isn't clear, I mean, we've got this move. I can use the 5 minutes as well. Just give me one second. All right, so let's reset that. So I'll keep watching this and then we'll come back when we have a swing. Market isn't making it easy for us. So we're just making this swing low on the 5 minutes. We've spiked all the way into that fair value gap. Uh, Now I'm not going to take this. It's a bit too, it hasn't really established that swing low properly. So I need this candle to close first. Then if it goes back into that fair value gap, I will take a short. I need to establish that this low is safe first. Then we'll wait for price to go back, revisit that fair value gap. I'll drop down to the 1 minute. All I'm looking for is a rejection, right? Very similar to what you see here, just on the 1 minute, a rejection. Okay, so but we need the 5 minutes to close so we can establish the actual range, right? The high and the low. Because the fibs cannot be used until we have an established high and then an established low. So we need 3 points. We need the lowest point, we need to the left a higher low, and to the right a higher low. This is not closed yet, so I can't use it. On the 5 minutes, I operate on the 5 minutes. I operate on the 5 minutes, so I need to see what the 5 minutes is actually doing. All right, we'll come back once something happens. All right, guys, it's let's see, what time is it? It is 11:45. We are 15 minutes away from lunch. Okay, so we've tagged this inversion fair value gap. I should add that on here. It's a big one. Okay. All right, so what does that mean? Give me one second, just make this a little lighter. So this one we can take away. We now have the 50 and the overlap with this. Okay, inside this fair value gap, we have the 1 minute at the moment triggering. So, okay, we're going to take this one here and we're going to put stop loss just above this candle, right? Just for now. Okay, and okay, so step one was just the direction. Okay, that's launch, by the way. The direction. Oh, need to grab this. All right, so direction. Step two, once you have that swing high and swing low, the next step is identify all the fair value gaps. So I use the 5 minutes, 5 minutes. Now, you also need to identify any fair value gaps on the other side, right? So not just uh, inside that move. You can use the other fair value gaps, so IFVGs. Once you do that, then it just comes down to price will retrace. When it does retrace, which fair value gap supports price? Like which one is going to hold it? Not run through it, but hold it. The best ones typically is over 50%, so 50%, 60, 70. I just look for the best one that price supports, and I use the 1 minute. So if the 1 minute, if I see weakness, so I'm looking at a different screen, and I see a push away, it's not always correct. It's not always correct. So basically I see rejection on the 1 minute, then I see a push, like a displacement. So basically it creates like a fair value gap. I would just trigger the trade as soon as I see that. I could wait on the 1 minute for price to return back into that fair value gap, but it doesn't always do that, especially in the AM. Now, if this was a different time, I could have waited, but right now, um, we've gone into that fair value gap, by the way, on the 1 minute, and then we are. So let me just go to the 1 minute. Hopefully that kind of makes sense what I'm talking about. I'm just gonna grab another arrow. That one's too far away. So what I'm looking at on the 1 minute is this rejection. So I've been doing this so often that as soon as I see the rejection, I know what it's doing. I know what it's doing. You see the rejection and then you see the push. Okay. When it does that, it typically creates a fair value gap there. See? It's small, but there's a fair value gap right there. This is on the 1 minute, by the way. So I don't wait for that fair value gap to be established personally. And you can wait, but I don't. So you can wait for this third candle to complete to show you that fair value gap. Once I see this candle, that's it. I'm good. I'm good with that. I have enough to set up my trade. Okay, and then I just wait. So for now, we currently have our risk at 700. I'm just going to push this a little closer below this. Yeah, get it to around that 500. 700 is okay. So I do between 500 and 2000-ish. It depends. Again, every trade is different, but I don't think there's any need to risk more. We're getting close to launch. All right, so now let's do the final bit. Grab the fib, and we're going to do a measured move. Okay, and we're going to have it there. All right, let's do that. Okay, and then we're just going to change this one to sim, make it bigger. All right, and we're just going to grab this and put that there. Okay, that's it. That's the trade. Very simple, part of the two-step framework. The two-step framework is the same framework I've been using. I just used to call it the fib framework or the fib model. I just changed the name. So it's the same thing if you watch all the videos. Okay, so I call it the fib model or the fib framework. And we've just gone through those 3 steps. Very, very simple. Get your direction first. Once you have that, then you get to step 2, which is wait for that retracement into a fair value gap. The third is make sure the fair value gap overlaps with a fib. That's it. And that's all you need. The rest is experience. So watching for that fair value gap to hold price, support price in the direction that you've already seen. You've already seen the direction, so you know where it's going. You're just following the trade. So I'm only looking for one opportunity a day. I've got it, so I'm either going to make money or I'm going to lose money. So the final part would just be the result. All right, so see you guys then. So it's 12:10 p.m. We're into lunch. So we're very close to TP. I don't want this video to be too long, so I'm probably going to end it here. I will manually close out the trade if I'm watching the 1 minute, so if it feels like it's just going to run up, I will manually close the trade. Um, I mean, that's really it for today. It's just finding that one opportunity, following the process, following the model, following the framework. No rules. I don't have rules because I cannot follow rules. So my framework just has steps or stages. I call it the two-step now. I used to call it the fib framework or the fib model. So if you hear me say fib model or you hear me say a two-step, I am talking about the same thing. Very, very close to TP. I am just going to pull this all the way down because there's no point at this minute. It doesn't matter. I'm good for the day. I'm good for the month. I will see you guys in the next video.